people are using their HSA incorrectly. They're doing some good things, don't get me wrong. They're putting their money in and getting a tax deduction, but then they're spending it right back out on the medical that they have. They are passing up on the most valuable benefit of the HSA, tax-free wealth building. I want to go over that in today's video on how you can convert your HSA to a health investment account to grow and build tax-free wealth. I'm Matt Sorensen. Let's build wealth. Now, most people understand how an HSA works, and people talk about the triple benefits of the HSA. I do, and I love that, but that's not it. I want to make sure you're getting the full impact of the HSA. I put my money in, I get a tax deduction. For 2025, that's $4,300 individual or $8,550 if you're a family. Now, family could be you and a kid, you and a spouse, you, of course, and a larger family, but either one of those counts as a family. Now, we all know you get that deduction. It costs off the line. You don't have to itemize your tax return. You never phase out of it. You always get to take that deduction on your tax return. And that's awesome. We've got to do that. That's step one to having some benefits from all this medical we incur in our life. But step two is, and this is the second benefit of the three benefits, I can take that money and go and invest it. Now, here's where people go wrong. Most people use an HSA and they do one of two things, both of which are wrong in my opinion. They put the money into the HSA and they spend it right back out on the medical that they have. Now, if that's your budget and you don't have money to set aside and save and invest, that's fine. I'm okay with that. Still do that because you get a tax deduction. But if you want to build wealth, I'm telling you, the better strategy is not to spend the money out of the HSA. I know you're thinking, but Matt, it's medical expenses. Why would I not spend it out of the HSA? It comes out tax-free. Isn't this what this thing was made for? Yes, it was made for that. You got a tax deduction. You can spend it back out, no taxes for any qualifying medical, but you don't have to. Well, why would I leave it in, Matt? Because you can invest it, grow it, and it comes out entirely tax-free at any age. This is not like a Roth IRA you got to wait till you're 59 and a half for. You can pull it out at any time for qualifying medical, and there's a critical rule to understand on how to do this. Now, the critical rule most people get wrong that I want to make sure everyone listening here understands is when I have an HSA and I'm putting contributions into it, then all of a sudden I have qualifying medical that year. Well, I don't have to use the HSA and pull the money out. I can leave the money in, let it stay invested and grow, but that medical expense I had during the time I had the HSA, I can still use that later on, 10, 20, 30 years later, add that expense up along with any other expenses I have, and then take tax-free distributions out of the HSA. So let me give an example so you can see how this works. All right, so I've got that 10 years of contributions, $85,550 that I had put in, but I don't want that money just saving and sitting there doing nothing. We don't want a health savings account. I want that money to invest and grow and work for us. Now, when you invest the account, you can buy real estate, you can buy crypto, private funds, precious metals. These are all assets we do in health savings accounts at my company, Directed IRA. But you could also just buy a stock or an ETF. Let's just say you bought the S&P 500 fund, okay? That's returned over a 10% annual rate of return over the last 10 or 20 years here. So let's say you just did that for 10 years. All right, now that $85,500 in that instance is $150,000. So I've got a lot more money to work with here than just the 85K. And all of that gain, that additional $65,000 of money I have in my account, that additional money, there is no tax. When I sell all this stock or any of these investments that I may have had in the account, there's no tax on the gain. I get to keep all of it. And that's one of the benefits of an HSA is the money you make investing and growing that account, there's no tax on it. Now, you might be thinking, but Matt, how do I get this money out one day? Well, we still had medical. Let's go back to 2025. And let's say in 2025, you had $2,000 of dental expenses between you, your spouse, kids. Maybe somebody had braces that year. Maybe you had a couple $1,000s of co-pays, or someone had a surgery. Someone had to go to urgent care. You know, this medical stuff does add up. So whatever your medical costs are, they could be dentist, orthodontist, they could be co-pays, they could be out-of-pocket medical expenses, they could be prescription drugs. Any of these things you're paying for medical, you get to take as a deduction. Any of these things you're paying for medical, you get to add up and take out of your HSA whenever you want. You don't have to take it in that year. So if I had $2,000 in dental and $4,000 of medical, let's say $6,000 in 2025, I don't need to take it out in 2025. Instead, I can let all of that money stay invested in my health savings account that is now a health investment account, and I can later take that money out in 2035 or 2045 or whenever you want. As long as I keep records of those medical expenses, I can submit them for reimbursement tax-free from my HSA whenever I want. There is no date or restriction on that. Now, this could be when I'm 50, when I'm 60, when I'm 70, whenever you want. Now, what happens for most Americans is the time you have the most medical expenses is actually in retirement when you're not working and making income. And that's the time I want you to have a big HSA. when you hit 60 or 70 or whatever retirement age you have, you sell your business, you stop working, whatever it is, I want to make sure you have a big HSA account, because the number one expense you have in retirement is medical and healthcare. That is a huge expense. I don't want you depleting your IRA or 401k for that, or your other savings or wealth. Let's go back to this HSA, because what you got to do with your HSA is you invested it, you grew it, and you have all of this tax-free growth coming back to you later on for all this medical and stuff we know we're going to incur. And that one strategy right there is how you take advantage of the HSA, turn it on its head, and make it work for you. Because now what I'm doing is I'm taking advantage of that rule that doesn't force me to take the money out of the HSA, because I know it can build and grow tax-free, and I'm going to let that money start working, investing, and growing, and coming out tax-free later on when I know I'm going to have a ton of medical. Now, there's so many strategies to HSAs, IRAs, Roth accounts. I give all those here on my channel, so please make sure you're subscribed. Also, strategies on asset protection and building wealth. I'm Matt Sorensen. We'll see you next time.